Daniel Frishberg is Chief Investment Strategist at LafferFrishberg.com. He joins us now live from over in Chicago. Dan, good evening. Your side, great to see you again and to have you back on the show. The sell-off that we're seeing, I'm just wondering, is the market telling us, among a lot of other things, not just pricing in the possibility of a very long, very protracted global recession, the fact that, we had these steps to thaw the credit markets, we're seeing that happen already, but that's too little and probably too late for the real economies?
Well, no, I think what's happening is the credit is thawing out, but you have to remember that there are deals. A guy didn't buy a house during that credit freeze. That means he didn't buy furniture. He didn't buy a big screen television. He didn't buy appliances. Now that train, the train that would have brought the plywood and brought that stuff, that company didn't get some business. And the people who work on the train company, they didn't buy things. And this stuff has yet to work its way through the economy. So I think we've solved some of what was initially causing the disease, but you've got a long way to go as this works its way through the American economy and then into the Asian economy, and that's, I think, what we're seeing.
It's got a long way to...
We're also seeing...
It's got a long way to work its way into the economy, but how much has already been discounted by the market, Dan?
I don't think enough. I think there's a long, long way to go by this. And you have to remember that in the stock market, you have, this is not a 300 million people country with a stock market. This is 6 billion people trading. And what's been happening, you guys are in Asia, and you know that the metrics have changed. A few years ago, we thought that interest rates were going to rise in U.S. Treasuries. But what happened, China wanted to buy a lot of U.S. Treasuries, and our interest rates stayed low, and nobody could figure out why. Now we know it was because foreign money was coming in buying U.S. Treasuries. Around Labor Day in September of '06, it looked to all of us like we were about to have our stock market roll over, but suddenly there was a new influx of buying from abroad, and they moved our stock market into another year of bull market. This is a market where everybody participates, and whenever we think we know what's going to happen based on old metrics, we get fooled. Chinese people, Asians who have owned a lot of stocks are disillusioned, they're selling, and every time we get a little bit of a rally here, they sell. Yeah. And until we get rid of that overhead supply, the stock market is going to keep being overcome by sellers.
Okay, when are we going to get rid of that overhead supply, Dan? I mean, we've been noting one of the reasons why the dollar's been so strong almost the last 3 months plus now, 2-year highs against the euro right now, is because there's a lot of Western money, U.S., European, etc., pulling out of emerging markets, including Asia, repatriating that money back home.
The catalyst is going to be low prices. And of course, look, there are people in, well, you're asking for a level, but I would rather give a condition because, look, we have to figure out how to make money in this market. What I'm looking for is we get to a point where we get a rally, and after a couple of days, we get a period of sustained buying where the advances versus decliners start to get better after a few days rather than worse, and the upside volume starts to get stronger after a few days, which is showing that people are being compelled to buy by the low prices. It's that behavior that I'm looking for. That's when it's going to be safe to get in there, and I think it will coincide with sellers feeling that we've now reached a point that's too low. Right now we have the opposite.
You've been talking about a bubble in bearishness, something that can just get bigger and bigger and bigger beyond all fundamentals, beyond all reason, essentially, a lot further than many people think it can go. But I guess the definition of bubble is that when it pops in a big way, which might suggest, by your definition, that we could see a really hard core pushed back up to the upside. Is that feasible this time?
Yes, it is very feasible, and then again, and then we may never see a low for many years like the one that we're having now. But that doesn't really mean that we have to have a new bull market. Look, people are really disillusioned by the fact that they thought this was all going to be very easy. You, I, and people who do what we do are trying to bring these facts to people, but nobody really thinks about currencies, the monetary base, and things like that. They don't really think. No, they think that buy a few different color brochures of mutual funds and you're going to be diversified. I think now, as we deleverage and as people are going to have less debt, they also are finding that they need to know more.
We're going to get back to you very shortly. Dan Frishberg, Chief Investment Strategist at LafferFrishberg.com.